So if I start, my name is Kate. Some of you will know me, some of you won't. I'm currently working on the payroll side of things. We are putting through many changes in terms of our payroll function and our service offering at Goodwill. But history-wise, I've been in Goodwill for many years and I've been back as an employee since March 2022. So I've switched over from the finance side over to the payroll side. So hopefully we're going to make this session as relaxed and easy and as fun as payroll and benefits can possibly be.
My name is Lily and I'm fairly new to the payroll team at Goodwill. I joined back in October, however, I have been in payroll for about 4.5 years now, and I will be working alongside Kate with just making sure this process runs smoothly and we get to where we need to be.
Perfect. So for those of you that don't know Goodwill very well yet, we are a professional services provider. We specialise in foreign-owned subsidiaries. Majority of our clients have Scandinavian or Nordic roots. We offer finance, HR, payroll, corporate governance and front of house services, so a complete solution so that they can scale up their UK operations. In today's webinar, we are going to cover payroll and benefits and the changes that are coming to the UK for this topic. We're going to cover the current process around the reporting of benefits and how these changes are going to impact on you and your employees. So we'll start with the current process. For those of you that don't know about a P11D, excuse that noise in the background, by the way. For those of you that don't know, when you provide your employees with benefits, there will be a taxable implication for the employee and also Class 1A national insurance for you as the employer. So at the moment, you will provide those employees with benefits, for example, a company car or private mileage. And once a year, we prepare a P11D to declare those benefits to HMRC. It's done in July, and then there is also a P11DB, which covers the employer for their Class 1A national insurance. So once they're submitted to HMRC, the employees get a change of tax code so that they are then taxed on those benefits, and that is therefore done in arrears. So to be really clear, in July 2025, we are going to be submitting P11Ds, which will cover the period April 24 through to the end of March, early April 2025.
So moving on to payroll and benefits, you might be surprised to hear that it's actually not new. It was introduced by HMRC back in 2016, was it? 2016. However, from April 2026, it's going to be mandatory. So for the year 2026 into 2027, it will be mandatory for all bureaus, all employers to payroll their benefits. During the 2024-25 tax year, HMRC has enabled the functionality of us as tax agents to be able to register clients via our agent portal. This has previously been a significant blocker for allowing us to give you the option to payroll benefits in kind. So it's only this year that it has become a voluntary option, and we've been able to give employers the option to do that. All benefits can be payrolled apart from living accommodation and small loans. These will still need to be reported on a P11D for now. This will be reviewed over the coming years, but as far as we're aware and what we've been told so far is that these will need to be reported on a P11D.
This slide just shows you the differences in the reporting requirements. So it's just a quick, brief overview, and the slides will go out or you'll be able to watch this recording afterwards. So it gives you a really clear view of what's happening. So at the moment, the employee will receive the P11D and then the employee is taxed. Hang on, what's happened there? Let me just move that over 1 second. So the current situation is that the employee receives a P11D and they will be taxed in arrears. If you opt in early, the employee will not receive a P11D, but they will see their benefits on their payslip on a monthly basis. If you opt in early, The system is not set up yet to ensure that the social cost, the Class 1A NIC, is recovered on a monthly basis. So even though the employee doesn't get a P11D, as a company, you will still need to submit a P11DB, which will collate the total of those benefits, the cash benefits for those employees, and you will have to pay the national insurance over on those. When it becomes mandatory and the system is rolled out fully from April 2026, HMRC will have put the legislation in place and we will be fully on board with payroll and benefits. So there'll be no P11D, no P11DB, and you will be, the employees will be taxed on a monthly basis, and also the employers will be paying the Class 1 NIC on those benefits on a monthly basis as well. So there is a kind of where we are now, where we could be, and where we are going to be. So yeah, it's a bit of a change in reality. Bringing us to where we are today. So there is the option to voluntary sign up this tax year coming, which means you can start payrolling your benefits, your employees. There are several things that are still not clear in terms of this from HMRC and the guidance that they've provided to date, which kind of leaves us in a little bit of limbo, to be honest. As a bureau, we are willing, able, happy if you want to move down this route of voluntary sign up. However, we do need to make you aware of the issues that are still going on in the background. So there are a couple of things really to be really clear on. The first thing is that we don't genuinely expect most of our clients to opt in early, because there is going to be a negative impact on the employee's take-home pay. So what's going to happen is within the first year, when payroll and benefits is taken, whether it's voluntary or mandatory, there will be the transitional year where employees are going to be taxed in arrears for the benefits they had the previous year, and also the employees will be taxed on the benefits that they're receiving in the current period. So the employees will see this as a double taxation, and there is nothing you can do to stop that from happening, other than it's going to happen whether you go optional or mandatory, but potentially there's not a massive amount of time to prepare the employees for the fact that this is happening if you go voluntary. We're working really hard to try and make sure that our employers are sharing knowledge, information with their employees to make sure that the legislation is clear to what's actually going to affect the employees. And the effect on the employees will be more than it will be on the employer. And that transitional year is really key, that that's understood as an employer, what that means for you guys and also for your employees. So as we've said, we are really keen on making sure that the communication is there and needs to be shared, because there are certain things that are going to happen. So if you decide to take this on, you need to let your employees know that their tax code will change, because the benefit in kind is going to be reported real time, and then the tax will be processed on a monthly basis. There are a few things that we need to make sure that you are aware of as well, which is, as well as the transitional year where there'll be the double hit for tax, there is also a 50% regulatory limit of tax in the UK. So based on your taxable pay, you can only have 50% of that taken as a tax deduction. We have that in place to stop financial hardship for employees, which in day-to-day generally is fine. However, if you have an employee that has a significant benefit like a company car and they are going on to maternity leave or they're off on long-term sick, we potentially have a tax benefit or cost that is going to be rolled forward into the payroll, because if we cannot deduct the full amount in the month, it's going to be taken forward, and then if it crosses the tax year, the employees are going to be sent a letter from HMRC which will give them a tax bill. So there's quite a lot of work in terms of the comms that we want to do for that, to make sure that employees understand and they are as supporters as they can be in terms of that. So there are a few things that we're doing. So as well as that, we are going to make sure that any new benefits that come in we're going to advise that employees should report them to HMRC as and when they get them, because there's going to be no P46s going forward for company cars. It will need to come from us. We will need to be informed, and it will need to go on the pay slip. So they also have the option that if they have a company car, they can contact HMRC and let them know that they're taking that benefit, and it will be taxed accordingly in the period.
Just a few important things to know is that we really want to stress that we are working on our software at the moment. We sent out an email recently confirming that we have updated our software and we have made a change. So we are compatible with payroll and benefits, and we can assure that it runs as efficiently as possible when people either do want a voluntary opt-in or when it does become mandatory next year. And as Kate has already touched on, we're going to work hard, and we're already producing the FAQs for employees and employers, just to guide them through this process, make sure they're fully aware and they don't have any unexpected surprises, such as the transitional year where they will be double taxed. And yeah, so HMRC have briefly confirmed that they're going to release more information in the summer. So we should be expecting to have bit more knowledge on that then, and we will most likely host another webinar to relay that information back.
So I think we've covered everything we need to. If someone decides they want to register, I don't know if I covered this or not, but in reality, if you decide that you voluntarily want to register for payrolling benefits, all you need to do is either email your payrolling officer, and keep me and Lily in copy. Our email addresses are on the slides, and we'll be managing that process to make sure that that runs smoothly. Yep. You can opt in for certain benefits. So you might decide that you just want to do your PMI, for example. You can opt in to do that, but you will still need to do a PMD if you've got company cars. So you will be doing both. There are multiple options in terms of that, but
we can discuss further.
Yeah, just
can't we?
reach out
of your interest
on a one-to-one basis for whatever you need in terms of that. Is there any questions?